I would love to hear from you, Sarah. What have you got to show us today?
All right. So kind of just Rob pretty much covered it all, but to reiterate and show with simple graphics, I made a little PowerPoint that I wanted to show. And this is just how we stay on the right side of the market in any direction. And Rob touched on the candle types, how there's 3 scenarios. So there's only 3 things any candle can do. It can be an inside bar, which is this 1. It can be a 2 up and take out the previous candle's high, or you can have 2 downs as well. But the 3s are very important because that shows broadening formations on a smaller time frame. And this is really cool too because there's so many different candle types and dojis and dragonflies, and still they only adhere to one of these 3 movements regardless of what they are. We like hammers and shooters, which show strength or weakness. And I love this about Trendspider. They have the Strat built into it, so you don't have to go looking for scripts or indicators. Everything is already built right into the platform. Full time frame continuity, the numbers, and then all the patterns also. And so this is what Rob was saying, that we know that there's only 3 kinds of candles. We know that they can only reverse and act in so many ways because it just is what it is. There's only 3 candle types, so there's a limited number of ways that things can continue and things can reverse. So knowing this, we use this sheet. This is our setup sheet basically. So this is kind of the tip of the iceberg as far as the Strat goes. The Strat is not just this sheet. The Strat is what Rob was saying. It's time frame continuity. It's time. It's the flip. It's broadening formations. It's knowing your targets. So using all these things, we have very clear entries, targets, and stops. We know, for example, if we have full time frame continuity to the downside, meaning your month, your week, your day, and your 60 are all red, and we get a 2-1-2, we're going short when this candle opens and takes out the inside candle, and we know where our target is, and we expect this to happen. And if it doesn't, you stop out right there. Your losses are small. And this is just to, I think a lot of traders had trouble in January when we got this huge outside bar. But you'll notice, so the flip, which is any new candle forming, which is part of the time frame continuity principle, we open the month, this is SPY. We open the year, the month, the week, the day, everything at this level at 476. So anytime we were below this during January, even though we were up at all-time highs, and people are normal technical analysis, the trend is intact. You got, people are trying to buy the dip on the 20-day, but we know that full time frame continuity is red. And we also know about outside bars. So I'm going to get into, I have a little section on outside bars, so I won't get too into that right this minute, but we know that anytime price is under this line, we have full time frame continuity to the downside. And we know not to buy the dip because we know what our magnitude is. A 3 is always to take out the other side of the previous candle. This goes over multiple time frame analysis. So this is the month, the week, the day, and the 60. You'll notice that all of the time frames are red. So the monthly is red, the weekly, the day, the 60. So this means that you should have a bear bias. You should not be trying to buy the oversold dip. You should be playing with the trend. Like Rob was saying, you don't want to be trying to collect the scraps at the profit taking, the tops or the bottoms. You want to be taking the whole move. This is another thing about the broadening formation and exhaustion risk. you'll notice, see these red arrows? Every time we hit a new high or a new all-time high, what happens? It's not sustainable. So you'll make a high, and then a low, and then a new high, a new low. This is a broadening formation. And also, back to Rob's point about support and resistance not being horizontal, because if that were true, we would never make lower lows or higher highs. So breakout traders struggle with these broadening formations because they're taught to go long above well-known pivots. And that's where like the smart money is getting out. Smart money is getting out at new highs. Breakout traders are getting in. So we want to be in from down at the bottom, from reversals. Once we make a new low, we want to be in and catch this whole move and not try and catch the breakout top, which is, again, exhaustion risk because this is new price action. There's, Rob always says we have to be playing against somebody, and you always are playing against somebody. But if you're at all-time highs, there's no orders up here. There's no shorts to be short against to blast the price higher. So that's when Rob will say, buyers have to keep stepping up. This is an outside bar. This has become my favorite strategy ever. It's gauging potential outside bars. So what we have here, let's just look at the green candle. It's a 2 up because it broke the previous candle's upside. So it's a 2 up. This candle opened right here, tried to go 2 up, started falling back through. So this is the rule. It's called, we've hashtagged it on Twitter. It's called the SSS 50% rule. And you can also search that hashtag for tons of examples and real life charts, and people are posting everywhere. So once this fails, the 2 up fails and turns red, that's also when continuity changes. So your short bias. And then once you retrace 50% of the previous candle, I'm not going to say we know, but more often than not, you're going to take out the other side of this candle. So that's the target. So you can enter up here if you want on a time frame continuity change, but I teach people to look for an actionable signal around the 50% retracement because we're always using multiple time frames. So this is a monthly candlestick, but it could be a 60-minute, it could be a daily candle. This outside bar works on every time frame. So let's pretend this is a daily candle and, we're at the 50%. You might look for an actionable signal on the 15-minute or the 30-minute to get in so your stop is closer instead of all the way up here because that's too much risk. So that's how we use multiple time frames also to lessen our risk and get better risk reward and a higher probability trade. So yeah, this is a really fun one. I feel like people used to be really afraid of threes, but now they're loving it because they know what it's doing. They're starting to understand it. And again, back to the Strat combo sheet, knowing when to take profits, when to enter, where you stop, or I just messed that up. Where to enter, where your stop loss is, and where your target is. Now, the Strat combo sheet does not have wicks included on the candles, but pretend that they're there. We use the candle's highs and lows, not the candle bodies. So this is like what it looks like on This is what it looks like on the Strat combo sheet. And on the right side, this is a real life example of a 2 down, 2 up reversal. And candle color doesn't matter in deciphering if it's a 2 down or a 2 up. It's direction. It broke from the previous candle is what determines it. So this is a 2 down, but it's red. This is also a 2 down, but it's green. That's okay. You're still playing the reversal. A down and then an up. So just like in the picture over here, your entry is a break above the 2 downs high. So right here, just like it is right here, when this candle opens, breaks the high, you're in. That's target 1, that's target 2. So just like over here, enter, this chart only has target 1. So, but this is how we take and apply the combo sheet to real life candles. And stop losses. So us in the Strat, we do not use stop losses as worst case scenarios. We use them as guarantees to either lose a little bit or lock in our profit and walking our stops up. We never ever let a green trade turn red and go against us. So your number one job as a trader is to protect your money. If you do not protect your money, you will not be able to stay in the game and learn the Strat.
Awesome. Thank you so much for that presentation, Sarah. One question that I have is, you guys talk a lot about the importance of full time frame continuity. What if full time frame continuity doesn't exist? What if you're not seeing it? Then what do you do? What do you do?
Full time frame continuity does not mean every time frame possible is the same color, because that'll never happen unless you're at all-time highs or all-time lows. It depends what kind of trader you are. I tell people the 4 time frames surrounding their time frame. So if you're a daily candlestick user, you want to have those 4 time frames right around the daily. So you might want so start with the daily, the 4 hour, the hourly, and the weekly. So those 4 time frames. So as long as you have the 4 time frames in alignment next to your time frame, that's good enough.